Bitcoin just broke all-time high again. What is the economic outlook for the current target rate for the rate cuts on September? How can you prepare for the initial jobless claims data releasing tomorrow? And what's going to be the impact on Bitcoin price? We're going to talk about that and much more in today's video, guys. Welcome to Bitcoin Predator. Hit the like button and subscribe. So right off the bat right here, we can see that although we had a short dump on Bitcoin price earlier on August, I already noticed that a couple of order blocks have already been mitigated because the price is going back up as we expect. So the first order block that I want to get rid of is this one right here. I was expecting the price to get this further down, but then eventually it got, as we expected, a quick liquidity sweep on the downside and then continue its way up. And as the price continues its uptrend, I noticed a couple of order blocks right here, as you can see, where I could place my trades. On the 4-hour time frame, we can notice a change of character right here at this level with a strong volume to the upside, confirming that a new trend has formed, and then eventually break of structures all the way up. And as the price has been breaking the structures on the uptrend, we can already get rid of a couple of order blocks and start to narrow down some points of interest. So this first level right here on the downside, we can get rid of it, and as well as this point right here, as it also broke the structure, we can also get rid of it. This one already broke the structure, but I noticed that the volume started to decrease a little bit. As you can see right here on the chart, we noticed that although the uptrend continued, the volume started to go down a little bit and then got up, but then eventually started to go down again. This means that to me that the price is starting to pile up and then is going to get back down here before continuing the way up. And we have been having a bullish week because primarily of the CPI data that has shown that the inflation is under control. If you guys remember correctly, last week we had a huge revision of jobs data, which is going to put more pressure on the Fed to reduce rates, while at the same time we can notice that the inflation is under control. So by the end of the day, we noticed that the labor sector is starting to get damaged because of the rates, while at the same time inflation is under control, and that's going to give more pressure on the Fed to reduce the rates. And as Bitcoin always does, I expect the price to go a little bit further down right here, aggressive liquidity sweep, and then continuing its way up. And the first data that I want to talk about here, guys, is the M2 global liquidity. Still, as you know, sometimes Bitcoin offsets a little bit, 75 days, 90, 100 days. It keeps changing. Sometimes the global liquidity continues its way up and then eventually Bitcoin price will catch up. Right now, we are starting to notice that the Bitcoin price is catching up, as it is just broke its all-time high. And I am expecting the price to continue to go up over the next few months until late August, beginning of September, when we're going to have the window that I believe we're going to reach the peak of this bull run. And then the bear market is going to start going down. At this stage, we are going to see that everyone is going to put their goals even higher. You're going to notice on X that everyone is going to talk about there is no more bear cycles. We're only going up right now. BlackRock is not going to let their investors lose their money, and then big institutions are going only to drive the price up. Which, let's face it, everyone knows this is quite ridiculous. I'm a strong believer that Bitcoin price and the Bitcoin cycles will remain. Right now we are on the bull cycle, it is going to end, and we are about to start the bear market at the beginning of next week. And whenever we talk about the M2 Global Liquidity Index, we also have to talk about the growth rate of the M2. I've been showing this data on my channel for a while already, and we all know that as long as the M2 growth rate is above, way above 0, we are doing just fine. So whenever the growth rate starts to go down and further down, especially near the 0 line, that means to me that the M2 growth is shrinking. So the M2 global liquidity is also going to go down. Taking liquidity out of the markets means that risky assets such as the S&P 500 and Bitcoin, they are also going to follow along and they start to trend bearish. When it comes to the next possible entry, I have the confluence that the daily cycle low already took place at around June, and then the most recent one just happened right now at the beginning of August. We can even see the confluence right here from the RSI that got as further down as the 40 level, and now the price continues its way up, and I believe that right after that we're gonna have around 60 days plus or minus 10%. That's gonna be when the next 60-day cycle low is going to happen. And when we estimate the next daily cycle low is going to be right after my window of the cycle peak of this bull run. So I believe that the price is going to be exactly that. As you can see right here, we are going to have the price continue its way up, confirming the right translation, and halfway up, then we're gonna have the next daily cycle low, and then continue its way up depending on the rate cuts and the economic data that we are going to talk about later on. But even though, just to make sure, I'm still tracking the second daily cycle low right here that has a confirmation because it was a stronger pullback. And then according to the daily cycle theory, we are quite close to the next daily cycle window. Nevertheless, I still expect the price to continue its way up, and then is going to be a short pullback right here in this region if this daily cycle confirms. However, I'm still not very sure because we have already passed the right translation confirmation. But let's keep an eye nevertheless. And in order for the price to continue its way up, we'll have to continuously see an ETF inflow on on-chain data. Right here we can see that we had a little bit of a outflow, but still is not too much in order to start worrying, because overall we still have a lot of inflow for Bitcoin. And at the same time, I still see the exchange rate, the exchange reserve on the exchanges continues to go down at around 2.5 million. Right before that we had around 2.3, and the reserves are bouncing around this level. This confirms to be that again a supply shock is coming closer, and it is going to drive the price even way up. From the previous breakout, we already noticed that after the weekend, the price already went back down, got some liquidation right here on the downside at around the 118 level, and then after some more accumulation, it continued its way up, and then more liquidity has been grabbed on the upside, around 41 million on the 122,000, and I believe we're still going to have some aggressive liquidity grab to the downside before continuing its way up. We already see some liquidity being formed right here on the downside at 118, 117, and let's see how it's going to play out over the next few days. We can start to notice that sentiment has been switched. Now, right now we are on the grid level. It means that we are getting closer and closer to the extreme grid, and it is going to confirm that we are getting more and more near the top. So get ready to close your positions. Don't let yourself be taken by the euphoria. Always be mindful, manage your risks properly. In the same way, we can see right here on the MVZ/RVZ score, expected uptrend as well as near the top. And all bets are already extremely high for the rate cuts in September. We already get a 93% of chance in rate cuts. However, you have to be aware that not necessarily because you're going to have a rate cut, it means that it's going to be bullish. Depending on the scenario, guys, rate cuts can actually be bearish. And I'm going to make a video about that, and I'm going to release over the next few days. Nevertheless, we can still see the truflation going down, still chopping a little bit since the beginning of the year. But as we can see, the tariffs have not had a permanent impact on the US prices. And right now I'm going to talk about the biggest data that I believe that is going to drive the price to the next all-time high, which is the initial jobless claims. I'm expecting some sort of even some revision from previous data, but nevertheless I think the initial jobless are going to be higher, meaning more people are getting fired, more pressure on the labor market, meaning more pressure on the Fed to reduce the rates.